Madhu S Nair, CMD of Cochin Shipyard. Thank you so much for joining in, Mr. Nair. Let's start by talking about the fourth quarter numbers. Revenue growth for shipbuilding and ship repair strong, but the upfront expenses in the ship repair bit has led to segmental EBIT loss, which in turn has weighed on your operational performance. So tell us about what exactly hit that, and will it extend in the first quarter?
Yeah, your assessment is very correct. What has happened on the EBITDA front is we have put in a bit of a provisioning in the Q4. This is coming from two aspects. One was on the ship repair side and one is on the shipbuilding side. But then I can say that overall provisioning of 58 crores in the Q4 has taken the EBITDA a little bit lower. It's not a write-off. It is actually some monies which we are pursuing. But from a prudent accounting point of view, we thought that there could be some delays in recovering those monies. So we have taken a provisioning in the Q4. It's not something that will continue. The underlying EBITDA margins remains largely intact.
On the project execution pace, Mr. Nair, which are the key deliveries that we will be seeing in the next few quarters?
See, the most important project on the shipbuilding side that's happening in the shipyard is Indigenous aircraft carrier, and you will see quite some traction on the Indigenous aircraft carrier. While the delivery of the vessel is 2021 February, there are key milestones that is targeted this fiscal, and as we are speaking, we are well on course to meet those targets. This is on the shipbuilding side. Ship repair, we have the first quarter would be a little bit subdued because we have this MOU with Lakshadweep government, and since the monsoon is approaching, we handle their vessels first during the monsoon season because it's connected with the passenger traffic in the islands. But thereafter, we have lined up a few larger ticket projects from the Navy in Cochin Ship Repair, and also the Mumbai Ship Repair is expected to deliver some figures as we move forward into Q2 and Q3.
All right. Okay. Mr. Nair, tell us about the contracts that you've been able to bag in the fourth quarter and the order book size as well. And out of that, how much is shipbuilding?
Yeah. See, the contracts, current order book on the shipbuilding side, what we have signed and contracted is 8,300 crores. And the good part is we have signed 3 contracts recently after March of this year. This has been a coastal bulk carrier order from a private company aligned with the JSW group. Then we have secured some orders for floating border outposts from the BSF through the Ministry of Home Affairs, and a big order from the Indian Navy, which is the ASW corvettes, which has been in the waiting for some time, but now we have formally contracted this. So this is 8,300 crores on the shipbuilding side. Also, we are in advanced stages of discussions on the Phase 3 contract on the Indigenous aircraft carrier, which we expect to come online in the next 2 to 3 months' time. So if you factor those also, then we are somewhere around a 15,000 crores order book. So on the shipbuilding side, we are generally comfortable on the order book side. Ship repair, as you know, we take orders as we move along, and we are sensing strong traction coming in. We should be picking up about 500 crores of orders this year also as we move forward on the ship repair side.
What's the FY20 revenue growth that you're working towards, and what's the EBITDA margins range that you plan to maintain?
FY20 revenue growth should be strong. Very conservatively, I can guide close to 14% increase in the top line, and that's a conservative approach. And EBITDA margin should be like a standard about 18 to 19% on the shipbuilding side and about 22 to 24% on the ship repair side. So all in all, we are looking at a good FY20 as we move forward.
Okay, and if you could just tell us about, what we can expect from FY20. I mean, based on what the order book is and, what you've told us about pipeline. What sort of revenue growth can we expect from FY20? And okay, you mentioned that, but if you could also talk to us about, based on your revenue growth outlook and your EBITDA margin outlook, what would be the dividend payout? Because that's healthy, with close to 40% of profits being distributed among shareholders. So based on your revenue growth outlook and margin outlook, will this stay steady, your dividend payout ratio?
See, we have, you are also aware that there are certain guidelines under which we operate also on the dividend payouts, being a PSU. So this year we have cleared a 130% dividend, which I feel is fairly healthy. And I can guide that we would look at similar dividends as we move forward also into FY20. And revenue growth, since I mentioned, we are targeting a top line of around 3,400 crores. This year we are 2,962, and that's a significant jump from the 2,355 which we had in FY18. So top line traction should be good. Dividend also, I think the market should expect something similar like what we are doing currently.
Nair, all the very best for that. Thank you so much for taking time out to chat with us.